Hi, and thanks so much for joining me in this first video in a 5-part series highlighting the key points about these unique payment streams. You are in for a treat, as these higher yield, period-certain payments are a little-known alternative fixed income investment that can make a huge difference in your portfolio. My name's Nathaniel Pulsifer, and I'm the founder and president of DCF Exchange, a wholesale trading firm specializing in discounted cash flow payments from structured settlement annuities. I've been buying and selling these payment streams in this industry full-time for over 13 years, and I've handled over $430 million in future payments without a single customer ever losing a penny. I found these innovative payment streams to be a perfect fit for retail customers just like you as an alternative to complicated and restrictive indexed annuities that had lower yields and more complexity. They're also better than many SPIAs, or single premium immediate annuities, and fixed annuities, but I'm going to get into specific comparisons in another video, so hang on. I got into this space offering these innovative, period-certain payment streams to retail customers. Advisors quickly reached out to me from my email list wanting to sell these also, and that's when I started DCF Exchange in 2016 as an advisor-only sales platform. But you're watching this video on my retail-facing website, where you can work directly with me and where I offer exclusive deals and limited time offers on inventory that's not shown elsewhere. Sort of like the factory outlet for DCF Exchange. And just so you know, DCF is a capitalized intermediary. That means we buy each of these payment streams on our balance sheet before we offer it for resale. We're on the same side of the table as you in each of these transactions. We go through all the rigorous due diligence and the legal review on each transaction because it's our own money at risk. My money at risk in every single transaction. We're asking the same questions that you ask to make sure each transaction is safe and all the paperwork is complete. So this 5-part series is designed to give you an understanding of the market and how the purchase process works with our company. I tried to touch on every frequently asked question that I hear, but if there's anything I missed, please just feel free to give me a call or an email. So let's get started in video 1. Just what are wholesale priced discounted payment streams? All right, thanks for joining me on this first video about DCF income payments. These payment streams go by a couple of different names. Sometimes they're referred to as wholesale income payments, DCF income payments, or secondary market annuities. All of the names refer to the same thing, which is a period certain guaranteed payment from a top-rated insurance company. Companies like MetLife, Prudential, and Allstate, American General. These are all the top-rated carriers that are active in the structured settlement annuity space. Structured settlements are used to settle lawsuits, and sometimes payees, who are typically the defendants in lawsuits, sometimes they need to sell their future payments that they've received through settlements in years past for a discounted lump sum today. And my company buys the right to receive these existing in-force payments, and we do so in court-ordered transactions. I'll detail a little bit more about the transaction process in just a second. But the important thing here is that the payment streams that we make available have a higher yield and a lower price. So the thing to keep in mind right off the bat is that you're going to get a higher yield through this marketplace by buying what is essentially a recycled annuity payment stream. At this time of this recording, interest rates are about 4.9% for a primary annuity paying $1,000 a month for 20 years guaranteed. That 4.9% rate translates into a price of about $152,984 for a 20-year period certain $1,000 a month income stream. Contrast that with about a 6% rate on our inventory today for the exact same income, and you'd save $11,599 buying the same income from typically a higher rated carrier in a secondary market transaction. So as I said, payees sell their future payments in a discounted lump sum, and we transfer these payment streams in state-specific and court-ordered transfer proceedings. Every state has transfer protection laws that protect the consumer, in this case the seller, and make sure that the transaction is in their best interest. And it follows IRS law and IRS statute, specifically Statute 5891, in order to transfer payment streams. DCF Exchange is my company supplying these payment streams, and we handle this court approval and the transfer process and legal review certification. We also set up payment servicing of each payment stream and back office documentation. We service advisors around the country in these transactions, and this graphic details what the transactions look like. So an individual settles the lawsuit up front for cash or an income stream, and DCF Exchange buys the payment stream later, some years, sometimes many years after the transaction, when the original payee's situation changes. When we sell these payment streams on to individual customers, we do so using payment servicing and escrow services from Gold Star Trust Company, who's a third-party service provider, fully regulated bank and trust company that acts as a payment custodian and handles payments for the customers in the future. So these payment streams have many, many benefits. First of all, they're low fee, low cost, highly efficient, and with no volatility. The payments come from the top-rated insurance companies, but they are exactly what they say they're going to be. They're a fixed payment stream, such as in my prior example, $1,000 a month for 20 years guaranteed. That's all it is. There's not going to be any market volatility. There's no ups or downs or crediting methods or anything complicated like that, like you might see with other kinds of annuities. These payment streams can be purchased with cash or with qualified dollars, such as IRAs, 401ks, Roth IRAs. They can all be rolled into self-directed IRA accounts in order to acquire these payment streams. What's particularly attractive for this, for many customers, are no onerous suitability restrictions that you may find with other annuity products. In addition, we have typically a superior credit quality and a higher yield than other annuity products and other safe money offerings, which I'll be showing you quite a bit about how to compare this in an apples-to-apples manner in future videos as well. So I keep saying that they're higher yield from high-quality credit carriers. Let's just take a look at some of these carriers. We typically see companies like MetLife, New York Life, Berkshire Hathaway, John Hancock, Pacific Life. I did a study of the kinds of carriers we see, and there's a predominance of MetLife, which at A+ on an AM Best rating is not a bad place for almost 20% of our cases to be. And then it kind of gets better from there with a bunch of other A+ carriers like Prudential, Allstate, American General, Pacific Life, New York Life, Berkshire Hathaway. We really get the best of the best in this marketplace, and that's why it's really attractive to many buyers. As I said, there are a lot of benefits for buyers, another one of which is no age or state-based buyer restrictions. So customers in New York, for example, have very few annuities available to them because New York insurance laws are very restrictive, and they don't have as many options as customers in Florida or California, for example. With these payment streams, the payments are already issued, the annuities are already in force, and you're not buying the annuity itself. What you're buying is the right to receive payments under that annuity. So no state-based transactional new issue annuity regulations come into play. Secondary market annuity transactions related to the transfer of payment streams do come into play, but that is in the background to you as a consumer because those things are all handled by DCF Exchange before the payments become available for purchase. As I said earlier, they are suitable for IRAs such as 401ks or Roth or traditional IRAs, as well as with non-qualified after-tax investment dollars. These payment streams are fixed and guaranteed, and they pay to the purchaser or their heirs, and so they have no ongoing administrative or investment management fees or any kind of variable output characteristics. They're fixed payments, fixed income, and not securities transactions. Now, when you do buy with an IRA, there are some nominal IRA costs that vary from custodian to custodian. The one that I will detail in another video has the lowest costs that I've found in the marketplace, but they're pretty nominal costs, $150 a year. So now, just what are the types of payments that are available in this marketplace? The payments that we typically see I've categorized into three ways. I call them income now, income later, and lump sums, or income options, if you will. Income now, as it states, is typically an immediate income payment stream, which is great for a retirement income if you're in retirement now. Income later is typically a monthly income stream that starts at some point in the future, a couple of years out, sometimes many, many years out. Those deferred income cases are great for retirement income or supplemental income when you need them to step in at certain times in the future. And then the lump sums just give options. If you have specific needs, such as I've illustrated here, like a house remodel, a new car, or college tuition, you can time the lump sums for when you need them to happen. A lot of people also just use them as a safe and guaranteed investment vehicle that pays out guaranteed no matter what, and that gives them options in the future. So instead of buying an income stream that locks them in for a long time, they can use a lump sum and then make a reinvestment decision at some point in the future. But if you just think in terms of income now, income later, and lump sums, it'll start you thinking about how you can use these payment streams in different ways in your own situation. As I said, they are guaranteed, secure, and period certain payments. They're a higher yield than bond alternatives, and they come from these top-rated insurance companies. So a lot of times people will compare these payment streams to new issue annuities or to a managed portfolio of stocks and bonds. And in many ways, I use the phrase to buy term income and invest the difference. You might have heard the expression buy term and invest the difference in terms of life insurance when people are trying to sell whole life. Whole life is a very expensive product, and term life is cheap by comparison. This is very similar. This is term income stream instead of buying a lot of benefits and riders and things that you see in other annuity contracts. You're just buying a period certain term income, and you can invest or do whatever you want with the difference. By having a higher yield, you're going to pay less in price, and that savings can be utilized in various different ways in the rest of your portfolio. Our payment streams are customizable. I buy specific payment streams, but I can split them in a variety of different ways for people. So using this example, Bright House Financial, single payment lump sum of $240,000 on September 14th of 2037. If you don't want to make an investment of $108,325 for this case, rather you want to just spend $50,000, well, that's easily enough done. I'm just going to change the total output to suit the investment price. It's just mathematics. We solve for the payout at the same yield, and it comes to $110,777. The payment custodian, who is Gold Star Trust Company, receives each of these payments from the insurance companies into a escrow environment, and each dedicated escrow account can have different payees. So $240,000 will come in on this payment stream, and $110,000 would go out to one customer, and the balance would go out to another customer. All of these details are handled on the front end and set up with the custodian at the point of purchase. So in using these payment streams, it's best to get a really clear idea of what your goals are. It's a little bit of a different mindset to think about output as opposed to purely investment and hope. And so many investments, like in the markets or in an indexed annuity, for example, that has a variable kind of rate of return, those are hope and pray. What I offer is certainty and guarantees. So if you need $1,200 a month starting in 3 years and lasting 25, we can do it. If you want 25 years of income, I can do it. If you want to leave each of your kids a specific inheritance amount, or give them a certain dollar amount now and have it mature to them a long time in the future, 20, 25 years out, I can do it. We can do a lot of different things with period certain guaranteed payments. So I've talked about a few of the benefits. Let's make sure that you're aware that these aren't for everyone. They are a higher yield alternative asset, and it's suitable for investors who are comfortable making their own decisions and buying payments that are from available inventory. They're not new issued annuity policies, however. There are a few distinct differences. These are also not a well-known marketplace. The whole market is under about $1 billion a year. There are major Wall Street firms that buy this inventory, as well as a company many people have heard of, J.G. Wentworth. JG is probably the 800-pound gorilla in the space, buying payment streams from individuals, and they do TV advertisement as well. And much of the inventory in this industry is taken up by J.G. Wentworth and a couple of Wall Street firms that securitize. So not much makes it out onto the street. So you'll need to do your own due diligence on this asset class, ask some questions, do your research, read up on the paperwork, watch the rest of these videos, and make sure it's something that might work for you. It might work for you if you want some of these things, though. If you want a safe, higher yield investment on fixed income, if you want a known and period certain outcome, if you want an alternative to bonds and to other annuities, and if you want to lower your overall portfolio risk. I'm going to get into some of these risks in video 3 in just a minute, which talks about risks like sequence of returns, risk, and market volatility. Those are risks that are hard to quantify and easy to overcome when you're using guaranteed income like what we have available. So if you want more income, more stability, and more overall output, this might be for you. So roll on to the next video to compare these assets to other investment options and look at some of the benefits to your portfolio when you're using these payment streams. I'll also give you a little more information about how to get started in this, choosing cases, and what the paperwork looks like in future videos. This video is coming from DCF Exchange. DCF Exchange is a capitalized buyer trading millions of dollars a month in this space. We distribute nationwide through advisors and financial professionals, and we offer in-stock and customizable inventory. Customizable, as I said, we can split payment streams to suit your desire. We also have a simplified purchase process. As I said, we can satisfy IRA and non-IRA buyers. We've had over 830 customers, almost 2,100 files sold, and $430 million in future payments with no customer ever losing a penny. We've been in this marketplace for a long time and offer our product through financial advisors nationwide. All right, and thanks so much for watching this first video about these innovative, higher yield fixed income payments. I hope you can see now how these structured settlement payments from top-rated insurance companies can deliver a higher yield for your portfolio. With payments that deliver income now, income later, and income options with lump sums, we can use these in a variety of planning situations to help you achieve your goals. In the next video, I'm going to show you several different comparisons that illustrate further why these payment streams are better for you than using other payment streams you can see in the marketplace. You can get better results with more safety and guarantee, and that means more money in the future. I'll see you on the next video. So to get started, contact your advisor today, and we look forward to working with you.